is the Ridiculously Amazing Insurance Agent Podcast, hosted by me, Kelly Donahue-Piro. This show is for growing insurance agencies looking to maximize their biggest investment, their people. Listen to the top agency performance partners clients share their story on how they boosted their performance by executing a plan. Let's head to the show.
Hey everyone, welcome to the Ridiculously Amazing Insurance Agent Podcast. And this one is just a solo podcast with me, Kelly Donahue-Piro, your host. And what we're going over today is something that's impacting agencies all across the country, which is inflation. When inflation hits, insurance policies are more expensive and you're getting more inbound client calls. We're very strong that agencies need a plan to address this, both on training their team of what to say, who to reshop, and what to execute on. We know that some of the biggest ways to limit these calls is proactive renewal review calls, but we also understand that people are going to call in midterm. And so when this happens, we need to be tiering our carriers, we need to be cross-selling, and we need to be scrubbing accounts for discounts. So we walk you through some framework of exactly what to do to prepare your team. Now, in this podcast, we reference our how to reduce remarketing but still increase your retention rate. We have a whole online course, and we're actually going to do a special on it. It's typically $9.95, or you could subscribe to our online school for $245 a month and get this, a renewal review calls, time management, sales training, everything that your team needs. So whether you want to purchase it outright with a discount code or become a member of our school, now is a time to give your team the tools that they need. It's very easy for the team to get quickly backlogged without a great strategy. So without further ado, we'll give you more details at the end of this podcast. Hey everyone, it's Kelly Donahue-Piro here, and I wanted to do just a solo podcast about something that I think is really critical right now. So as we're going all across the country and working with our clients, the most important thing that I'm hearing a lot from the frontline staff is the increase in rate concern phone calls. And this is all due to inflation that's happening in America. You know, lo and behold, when it costs more to fill up your gas tank, when it costs more to buy groceries, people start looking for economic solutions. They'll call their cable company, their Verizon, Netflix. They'll determine if they want to keep it, and they start kind of purging their budget and going through it with a fine-tooth comb. And the reality of the situation is insurance is really absolutely no different. So what I want to share with everybody today is hopefully a podcast that you can watch with your team on how to handle this, because we are not going to be in a position where people are not going to call in. They are definitely going to call in. It is part of human nature and life. But we have to be prepared and have a plan for when they call in, of how we're going to handle it. So I want to walk you guys through some scenarios of exactly what to do. And I want to also state this. We actually have a course on how to handle rate. And it's around how to reduce remarketing, how to handle rate, and how to make sure that you can still hold your retention high. Because I think, the first step is when someone calls in, our instinct is to fix it. And we have to kind of reprogram our brains. Now, our instinct to fix the client's concern comes from maybe we're dealing with this inside of our own households, where we're looking at some ways to cut finances. We're also going ahead and taking a look and saying, hey, you know what? I would love to, help all these people, but the time it takes to remarket can get so heavy that workload gets backlogged and then no one's happy. So when people call in, the first step we have to do is take a deep breath, right? And don't panic. This is one of the cruxes that we learn in our how to reduce remarketing class. So don't panic and have your plan ready. The first thing that you need to do is to make that customer feel that you have empathy for them. So if they're calling in and maybe they've lost their job and everything's more expensive and they're concerned, we have to remember that the worst thing that can happen is that they cancel and don't pay their insurance. Because we know that when you cancel and don't pay your insurance and you have a lapse, it's way more expensive to get. Your options are very, very limited. And if you get pulled over in an accident or something happens with that insurance, that person's life is now worse than it was before. So you want to take that customer and greet them. And I like a greeting similar to this. First of all, thank you so much for calling us. I know that for all of us, it's getting harder and harder out there. The great news is, as an independent agency, we have options. So you did the right thing calling us.
And that's my specialty, is to work with people just like you to make sure that their family's still protected, but we can work it within your budget. So I'm going to go ahead and review your account with you. Sometimes we find that there's some updates that we didn't know about that can actually provide a great deal of savings. And we're going to come up with a game plan to figure out what's in your best interest. Does that sound like a plan today? So you want to take control of that call. I don't want anybody promising a remarket. We want to say we're going to review, because after you do step one, which is the empathetic approach, let the person know that you're here, you feel them, you understand, but remarketing may not be the best fit, right? So our then goal is to really stay strong on that front. So after we do that, next step, we want to pull up what we call our remarketing form. In the course, we actually have it, but I'm going to walk you through some things that you could put together on your own, because I believe we have so much valuable knowledge here. Why not share? Now, the form that we have is a little bit more intense, so I am just going to kind of go through the basics. The first one is we have to confirm contact information. So when someone is upset or frustrated, we want to confirm the contact information. It actually neutralizes the situation. So when that kind of happens and goes down, it's like, okay, let's just start here. Do we have the right things? And, when they say, oh, here's a phone number I've had on file. Oh, we haven't had that in 4 or 5 years. It's an indication, like, let's really scrub the account. Our next step is to look at the account and find out what happened. And again, this is all part of our form. Was there an endorsement? Was there a claim? How's their payment history? What's the age of their roof? Do they have a milestone birthday? Did a discount fall off? Has their insurance score maybe been in play? Was it not great before and maybe we can rescore? There's a whole checklist of things to look at. Are they driving the same amount? Are these still the drivers listed on the vehicle? We want to get all of that updated to try to figure out why. Why did the rate go up? Now, you'll have people at this juncture, by the way, that call because, they have just midterm because they're trying to shop everything. And then you'll have people who call at renewal. And so even midterm, these are still great questions to ask yourself. After you kind of scrub it, you'll either find a reason or not find a reason. And our next step is going to go ahead and go top to bottom through discounts. Now, discounts, I'm going to be honest with you, I think every agency should have a discount sheet where they clearly say, here's this carrier, here's all the discounts and a rough estimate of everything. So I think that the key to that is it's hard to keep 10, 12 companies straight in your head. The discounts change. So you want to have a quick go-to of here's some discounts. Let's review what they have and let's review what they may apply. Now, this is where you need to sell a discount. And I think a lot of times when rate comes into play, we back down and we go in that people pleaser problem solving mode. And I really want to make sure that we don't do that. I instead want to say, one of the great ways to get your rate down is actually by going paperless. As you know, the mail is super slow today. What I'd recommend is we get you on email statements. What's the best email address for you for that? That will save you $30 a year. Times 2 policies at $60 a year. So you have to sell it. And again, you want to promote each discount. So whether it's maybe EFT or pay in full. And I will say this, do not back down from EFT for pay in full, even if the person is saying that the cost is too much. That's in our own head, okay? My mother is super cost conscientious. But if you put a pay in full discount in front of her, she will do that because she has the money in her savings account and she sees the value. So we can't take discounts off the table because our little head says they may not be able to afford it. That's not what we want to do. So I want everybody thinking along the lines of this is an important strategy. Don't take a discount away. Let the client decline it. Okay. So we scrub for discounts and we have a list of them on our form that's with the remarketing course. And then we sell that to them. And so your sales pitch is always going to be, hey, I see this discount. I really think you should apply it. It's going to be, going ahead and getting you on EFT. That's going to save you an installment fee of $6 a month. That equals out to be whatever it is, $60, $72 a year. I'm going to go ahead and process this for you because it's going to be a great savings. Then you zip your mouth, you stop, you do not speak, because if you speak, you're going to speak over them, and just let them go and keep doing it. And if they say no, then you can stop. But you have to identify that you are here to be their advisor. And because you're their advisor, that's what needs to be into effect, is you need to guide them to the best decisions. After the discount review, if there's still nothing better, then we need to look and say, okay, and if you can rescore a client, that's also an option. Not every state and company has that, but if you can, that should go in there. Would they even qualify for a remarket? We're just going to say, I need to get some update questions from you. Pets, year of roof. How old are they? My 94-year-old grandma shouldn't be remarketed. Are we looking at what they do in their household? Are we looking at the minimum premium? A $700 policy, if we reshop them, is not going to save them that much money. Another check that we should go through is, do we want to keep them? Because if this client's not a great fit, we shouldn't spend the time remarketing them. So we can also look at this as an opportunity to potentially move away from some clients that aren't the best for us. So I want to kind of go through that and say, hey, remarketing prohibitors. We call this in our remarketing sheet, underwriting the reshop. Before we promise it, before we talk about it, does it qualify, yes or no? And if it doesn't, then we have to go back to the reason why. Hey, Mrs. Donahue, so because you have such a great dog, unfortunately, that dog is actually on our restricted dog list. What that means is that most companies won't write you, which I know is, unfortunate. However, let's go back and look at that deductible again. I think that might be another way to get it down. Or are you interested in usage-based driving? So you want to go pin back to the discount if it doesn't qualify. And then our last step is, if we are going to remarket, we've got twofold. The first step is, we're going to remarket, we really do need to update the entire application. Go through it with a fine-tooth comb. You are going off of old information. Really, we need to go off of new information. Because if they go shop you, another agent's going to ask those questions fresh. And lo and behold, now we have this problem at hand where they have information that you don't have. So we want to make sure that we're freshly underwriting everything. And also, if they're spending time with you on the phone, they're not spending time with other agents, right? But even before we underwrite, there's a little step that we put, which is what we call our remarketing kind of considerations, or our remarketing promise, which is 3 specific questions we ask before we go down that path. The first one is, how much would you be looking to save in order to go through the hassle of changing insurance carriers? And I want you to say it just like that, the hassle, because it is. I have to sign paperwork, cancel other paperwork. If it's homeowners, we've got to go ahead and, a lot of times the escrow might get kind of jacked up. If it's auto insured, coffee has not kicked in yet. If it's auto insurance, I got to go change their auto ID cards, go through all of that. So we want to say, well, how much would it cost? What would you be looking to save to change insurance companies? And they're going to say, $100. Okay, so you would change for, roughly $7 a month, $8 a month. And when you break it down monthly, people act differently. Your next question that you're going to ask is, if it's homeowners, I just want to let you know that every company, when they write a new policy, sends an inspector out. So this is, even if you go with a different agency, they're all going to send an inspector out. And the inspector is there to look at the risk and find anything that might need to be updated. So if they find that you need a railing somewhere, or a new roof, or paint needs to be replaced, they will require that you do that work in order to stay on the account. Are you willing to take on that risk? So think of it that way. Are you willing to take on that risk? Because there is a risk. You don't want to reshop someone only to find out they need to paint their house or put a new roof on. We just took someone from a hard situation to a terrible situation. Your last question is for auto. If someone is truly financially strapped, some of your companies may require a bigger upfront down payment. And so the bigger upfront down payment might be too difficult for them. So we want to say, depending on the carrier we may find, they may require a bigger upfront down payment. Is that something you're comfortable with before we get started? Now, those are meant to kind of have the final filter of remarketing. And then if you have to remarket, we are never going to email a quote. We want to book an appointment with the person to go over their options. And when we remarket, we're always going to get something out of that. Now, that could be an increase in coverage. That could be another line. We do not need permission to quote renters or umbrella insurance. We can just automatically do it. Same with life, the preliminary quote. So if you're going to think about remarketing, I want you to also think about what can we get with it. The worst that somebody says is no, and no just means not right now. So those are our remarketing strategies, but I want to go back and talk about one discount that in personal lines and auto we find gets often overlooked. And it gets overlooked because of our own personal preferences, number one. And number two, it's actually kind of hard to keep straight between all the different companies. So this is the usage-based driving telematics that is included with many carriers today. So lo and behold, this is the way of the future. So I don't want anybody sitting here saying, oh, well, our clients don't want it. We have to be able to explain it. And it's one of the largest discounts that people can apply for. So how we explain it makes a difference, but we also have to understand how it works for each and every single company. So similar to discount sheets, we do think that there should be an internal telematics sheet of just, this is what the telematics looks like, how to explain it, and giving people the guidance. After you find out that there's not much more you can do for them, they may reconsider telematics. They may reconsider some of the other items. So our job is to get good at explaining it so that we can deliver it to the client. But you can bet your bottom dollar, if they go to Progressive or they go to Geico, it's getting quoted with it. And more people are going to have it, and more people will feel comfortable with it. So it's our job to be knowledgeable in what we do to get there. So I'm asking all of you guys to take some time and learn telematics and keep your personal opinions out of telematics. You may not personally want it in your vehicle, but that doesn't mean that clients won't. And so as we go through those steps and the stages, we have to embrace telematics as an option. So our number one goal, provide empathy. And again, if this can all be in a sheet, it just kind of gives you the instructions. Provide empathy. Look for a reason why, right? Was it an endorsement? Was it that, whatever the scenario is? Okay. The next step is a discount review scrub. So that is the next step of, can we apply any discounts? If we can, then we don't have to go to the remarket. The next step is we do the remarket prohibitors. How much are you looking to save? Are you cool with an inspection? And the final step is we never email that quote. We always book a time to call them. And when we remarket, we get something out of it. And I'm telling you right now, the team needs training and scripts on how to handle this. Otherwise, you're going to see your remarket numbers skyrocket. The work gets backlogged, and that's the end of the day. So I think that it's a difficult situation that we're all going to be in. But the best thing that we can do, just like a Navy SEAL, is train for difficult situations. If you're interested in our course on how to reduce remarketing, we have it on our online store. We'll put together a discount code to help your agencies grow and thrive on this front. But at the end of the day, the best gift you can give your team is how to handle these situations so that you're not caught by surprise and people feel good about the job and understand your expectations day in and day out. Inflation doesn't appear to be going away anytime soon, so we can expect this for quite some time. And that means the best time to train your team is actually right now. Thank you, guys. And if you have any questions or want to work with us on this, we'll be happy to have that conversation. Take care, everybody.
So hopefully you enjoyed this, podcast on inflation and how it's impacting agencies. This is something that we specialize here at APP, is really going ahead to focusing on how to give your team the tools that they need to be successful. So we reference a lot that's in our course. We've got scripts, we've got whole PDFs of processes for people to follow. So if you've ever been interested in our online school, now is the time. You can subscribe for $245 a month and get this and so much more. We literally have covered every basis of an agency. Or you can purchase the course outright. We're going to do a 15% discount if you purchase this month, and the code is inflation. So let's get something good from inflation. If you have any questions, reach out to us. We'd be happy to answer questions that you have on our school or courses that you can purchase outright or subscribe to. But until then, Please give your team the tools that they need to be successful during this changing time. Left to our own devices, many agents will over-remarket and under-deliver and get backlogged quickly. We'll start dropping balls, and that will actually hurt our retention. We can't control people calling in. It's part of why we exist. When things change, they will shop their insurance, their cable bill. Every dollar has to go a little farther. Let's make it count and get something out of those reshops and get something out of those conversations with clients. So that's our story. We're sticking to it. Use the code inflation, go to Agency Performance Partners, go to shop and look at all of our courses. You can use that 20 or the 15% off code to buy the course outright or subscribe for $245 a month. Let us know how we can help you and your agency be ridiculously amazing as the economy changes.